Welcome to part 2 of the CEF Mastery Super Screener and Interactive Report demo. One of the coolest things about CEF Mastery Super Screener is it puts all of the highest yielding, highest quality closed-end funds right at your fingertips all at once. Then the question becomes, how do I sort through all of these funds to find the right fund for me? Well, the first step is to decide on what is most important to you in a closed-end fund. Is your primary goal funds that have the highest returns over the long term, have the biggest discounts, the lowest portfolio turnover rate, the least amount of debt, the highest amount of net income, the highest amount of net income and capital appreciation, the lowest distribution yield to NAV, the lowest return of capital, or the highest yield. In the last video, I showed you how to quickly find highest quality, highest yielding closed-end funds at the click of a mouse. I also told you that the highest yielding, highest quality closed-end funds usually consist of 3 primary ingredients: a score in the green, estimated number of monthly distributions remaining in the green, and a final score in the green. Now that you know what a quality, high-yielding closed-end fund looks like, in this video I'm going to show you how to use CEF Mastery, Super Screener, and Interactive Report to cater to your investment style when looking for closed-end funds. Then I'm going to walk you through my routine when I receive a fresh report. Also, I intend to show you a lot of the many features that will help you find funds that are suitable for you quickly and with confidence. Well, now that you know what a quality, high-yielding closed-end fund looks like, the next step is to decide what qualities of a closed-end fund is most important to you. Here's where I'm going to show you what my routine is like once I receive a new report. My particular preference is the highest yielding fund. So I start my search by clicking the current yield field. And knowing what a high quality, high yielding closed-end fund looks like, we can see the ones we want stick out like a sore thumb. Right off the bat, we see ASG has a final score of 46, 96 estimated monthly distributions remaining, and a score of 33. And you'll notice that it has an abundance of green columns. And one thing you have to be aware of when you're looking at these funds, you see it has an astronomical 23.2% dividend. That's because they're cutting a special dividend, which is inflating their yield. So this will go down before their next distribution. And now knowing that, we're going to decide to keep searching for our next fund. Right away we see Cuba, CUBA. It has a final score of 29, estimated number of distributions remaining of 35, and a final score of 27, the yield of 18.4%. Again, that's a very high yield. I would be suspect of that. I could look into it further, but to keep it simple, we're going to keep looking. A little further down, we have 2 more, CRF and JCE. CRF has a final score of 30, 16 estimated monthly distributions remaining, and a final score of 25. And since that's not green, we're going to move to the next one, which is JCE. JCE has a final score of 46, 53 estimated monthly distributions remaining, has already made 72.4% of the 6-month distributions, and has a score of 35. And you can see it has an abundance of green columns. Here you can also see it has a portfolio turnover rate of 52%. Now, it's important to point out that green does not mean good, and yellow does not mean caution, and red does not mean bad. Green is above average, yellow is average, and red is below average. So don't let the red scare you. This particular yield is suspect, just as with ASG. There might be a special dividend because I'm recording this in December, and that's when most funds usually do special dividends. So you'd have to dig a little deeper to determine if this is a fund you would want to invest in the long term. The next fund we come across is Fund. And again, it meets all our criteria. And it shows a yield of 11.2%. I already looked into this. I happen to know that this is additional dividend, so that is not the regular. So we'll keep looking. Our next contender is GRF, meets all our criteria, 10.9% yield, but you can see it has an annual dividend, so we're going to skip that one. A little further down, we have IFN, which is an Indian fund, meets all our criteria. It does have a long-term net asset value price change of negative 1.62%. That would not deter me, so I would give this fund serious consideration. I would also give serious consideration to the fund just below it, IAF. You can see it has a final score of 43, estimated monthly distributions remaining of 33, 10.5% yield, a 39 score, and it's down only 0.97% over the long-term NAV price change. And that long-term NAV price change is a 5-year period. Unless the fund is younger than 5 years, then it'll be whatever time frame is available. Also, not far below that, you see the fund USA, which has a score of 50, estimated monthly distributions remaining of 42, a 10.1% yield, and a score of 31. This is a good looking fund, and currently it's going through a rights offering, which has a short term effect of really beating down the price. I am a personal holder of USA. It is actually my largest closed end fund holding. I would definitely consider this an investment quality fund. Now, my personal routine, I usually go through the entire list until the yields get down to around 7%. But for the purpose of the video, we're going to end our search here and determine that we have found 3 quality funds that deserve consideration. Now, if you were to keep scrolling and you found quality funds all the way down to 7%, you would have a fairly large list of funds to choose from. So then the question becomes, how do you decide which one to choose? And this is when the fund comparison tool comes into play. I have already taken the liberty of entering our selections into the fund comparison tool. But before we go over that, I want to highlight some of the features that the fund comparison tool offers you. The fund comparison tool is kind of like a super screener to the super screener. It allows you to take any fund and compare it side by side. Let's say you're interested in funds from the same family. Or you want to compare a fund from one fund family to the fund of another fund family in the same industry. Or maybe you want to compare a national fund to an international fund in the same sector. You can do that utilizing the fund comparison tool in the CEF Mastery Super Screener. As a matter of fact, you could compare as many as 40 plus separate funds at once. Now, getting back to our considerations, IFN, IAF, and USA. We already know these 3 funds meet all of our considerations, but what we're looking for now is the best fund at this particular time. Over time, you'll develop your own preferences. But here's what I would do in this situation. I already know these funds have the yields that I'm looking for. I already know that these funds have the scores that I'm looking for. And I already know these funds have an ample amount of estimated monthly distributions remaining before they would even have to consider returning capital to shareholders. My next biggest consideration is the amount of debt that the fund has. And you can see that they're all in the green, so I'm not concerned about any of those. My personal concern after that is current discount to premium. My personal preference are funds that trade at a discount to premium of anywhere from plus 5% to it doesn't matter how low. The lower the better. Following that would be the estimated distribution to NAV. And as you can see, they're all basically about the same at this point. The estimated income gains to distribution, you would think that because IAF has a negative estimated income gains to distributions that I might rule this one from consideration. But the truth is, a fund could increase its net asset value by 2 to 3 cents and completely wipe that out and put it back in the positive. So that's not really a huge concern for me. If it comes down to it, it might be a factor that tilts the scale against it. But overall, I'm not worried about it. And I'm not worried about it because the fund has ample estimated monthly distributions remaining before it would have to consider returning capital to shareholders. Another major consideration for me is the long-term NAV price change. Now, what I'm looking for here is not that USA has a long-term NAV price change of an increase of 33.33%. What I'm looking for here is a significant drop in the long-term NAV price change. And usually this is the result of funds constantly diluting shareholders' capital. But the bottom line is I would invest in any one of these three funds. And in the interest of full disclosure, I do invest in all three of these funds. Two of them I just purchased this month, IFN and IAF. There is nothing here that would cause me to exclude any of them from being an investment decision. However, at this particular time, if I were to pick the best closed-end fund at this particular point in time, it would have to be IFN because it has already covered the distribution for the next 6 months and it is trading at the biggest discount. And that's all there is to it. Now, if at this point you're still not fully convinced that you're making the best decision and you need to know more information, then we turn to our fund stats page. Here on the fund stats page, you can gather a wealth of information about a particular fund, information such as a fund's objective, its distribution policy, if there is currently any alerts that you need to be aware of, market price, a more detailed chart of its performance, the numbers behind the score, and the final score, which comes from their most recent report. All of this information you've already seen in the super screener. But what's of particular interest about the fund stats page is its charts. Now, it's important to note that up to this point, any version of Microsoft Excel would work, but because of the charts available on the fund stats page, you would have to have Office 365 to take full advantage of it. First available chart is the fund's position of owner's equity. Now, as you can see, there are 3 items listed here. These come from the fund's balance sheet. It lists the amount of paid-in capital. And when you hear the term return of capital, this is where it comes from. And as you can see here, for IFN, they did just most recently happen to have a dip, which means they paid a little bit of capital back to shareholders. Next item is undistributed earnings. This is the pool of profit that funds can draw from before they would have to cut distributions or issue more shares or borrow money to pay their distributions. And as you can see for this particular fund, over the past couple years, their available pool of distributions has increased quite considerably since June of 2020. Which was the first reporting period after the crash in March of 2020. The third item is the shareholder distribution amount. As you can see, at all times, the amount of money they were paying out to shareholders has been considerably less than the purple line, which is the pool of profits they have to pull from to pay their distributions. And at the end, at this current period, you can see there's a substantial gap, which is indicative of a safe distribution. Further down the next chart, you have the fund's balance sheet over time. And as you can see over time, that the fund historically uses very little debt, and they're still able to pay out a substantial dividend or distribution. Further down still is the income breakdown. This particular chart shows all the fund's income sources in relation to the distribution paid out. The income sources usually consist of net investment income, which is normally dividends or interest received by the fund, realized gains, which are profits or losses that are realized at the sale of securities, and unrealized gain or loss, which are securities still held that have a lower or higher market value from their original cost basis, and of course the shareholder distribution. Now for IFN in this particular case, you can see in December of 2019, they did have a unrealized loss, and virtually all of their income was realized gains. And you can see the realized gains were in excess of the distribution they paid out at the time. Following 6 months in June 20th, you'd be hard pressed to find any closed-end fund that had realized, that experienced unrealized gains. So it is not surprising at all that this is way in the negative. You can also see that thin blue line, which is the amount of net investment income earned by IFN, and then the realized gain for that period. But you can also see that it was considerably lower than the actual shareholder distribution that they paid out. However, 6 months later, you can see that everything was in the green and they made more than their distribution payout. In the following 6 months after that, the most recent period, they still exceeded the total distribution amount they paid out. Very healthy sign. And next, we have the distributions chart. In this particular chart, you have the amount of shareholder distribution and the number of remaining distributions when those distributions were made. It's a little complicated to explain right now. It will have to be in a future video, but basically, funds report every 6 and 12 months. But when they report their 6-month period, they're only reporting 6 months. When they report their 12-month period, they're not reporting the most recent 6 months. They're reporting the last 12 months. So you're going to see fluctuations in the shareholder distribution where this would be an annual, and then the semi-annual, which is almost half. Then it doubles again almost annual, and it gets cut down almost in half in a 6-month period. Basically, what this chart tells you is if funds distributions are growing over time, and if the remaining distributions are growing over time, that's an indication that they're consistently exceeding the amount of distributions they're paying out, which is also good. The last chart is the distribution change history. Distribution change history shows you the amount and the percentage of a fund's distribution changes over time. For IFN, you can see that back in September 2020, they changed their distribution to 46 cents, which was a 9.52% increase over their previous distribution. And ever since, it has consistently gone up, which again is a very good sign for a healthy distribution. There you have it. Everything you need to know to make a good, solid decision in any future investment in a high-yield closed-end fund. Before you go, be sure to like and subscribe and click the notification bell for future videos that are coming out, because there is so much more I need to show you. How to maximize your benefit from the CEF Mastery Super Screener and Interactive Report. So look forward to many improvements in the future. Don't forget, please take the opportunity to take advantage of your one free report just for the asking. Send your request to TheDividendTimes, one word, at outlook.com. Subscribe to your 1-month free trial with an annual subscription. All the links are listed below. Thank you for taking the time to view my videos. I hope to see you in the future. Thank you and good luck.